Right, start of the recording. Hey guys, what is up? Welcome to another video here at FX. My name is Josh, aka the Homie Fletcher, founder of this lovely Discord community group that we do have called FX. And yeah, welcome to the weekly recap video. As you already know, what we're gonna do is just look over some of the trades that were taken in the VIP and also in the free Discord channels, and just look at how I view the market. So maybe you could get some an insightful look about okay how I see the market and how do I trade personally, right? And maybe this might help you as well. Also, I'll be dropping a few gems within this video about some of my analysis technique, which may be beneficial to you in the long run. So stick around for the full video to see all of that good stuff, right? So we're just gonna start off here. As you can see, this is one of the trades that we took, and then last week, which would be the Friday, right? That would be Friday the 11th, right? This was one of the trades that we took multiple trades here. One right here, here again, and here again. So it's like 6, 12, and a 4% winner here as well. So around 16, 17%, these three trades, and then Friday in the free group, and some other trades again as well in the VIP channel, right? So yeah, we're just gonna look at some of the trades taken, what it is that we started off the week with, and how did we analyze the market, how I analyze the market personally. I don't know why I keep saying we, force of habit, but how I analyze the market and see everything, with the current situation that we do have going on with Russia, Ukraine, and the invasion, sanctions on Russia really causing the markets to be a lot more volatile than usual. So we do get a little bit more of opportunities, but as well with the strategy that I do use personally speaking, uh, it's been a challenging 2 weeks thus far, since the month has started with everything that's going on, right? It's really been a sort of a complex situation, so to speak, right? So I'm just gonna scroll up here and just look for this when we started the trades right here, right? So we start from March 6th to the 11th, right? And the first trade that we were looking at was GBP sell. Again, this is in the free and the VIP. Let's actually go to the VIP, right? The VIP firstly. We got multiple trades, multiple setups, multiple stuff going on. Right, so let's just scroll up all the way up, right? So March 6th to 11th, right? So we had some stuff we were watching here. Euro GBP sell, right? First trade of the week. I was looking to enter here to a probable setup for sell continuation to around half of the risk reward that we are seeing, right? Which is a 1 to 6, right? The stop loss is 22 pips. Looking for a further sell off. Price on the euro is oversold. This is apparent, however, that doesn't mean we should start buying or in hopes, right, that it goes up. Price isn't yet ready for a reversal, hence I'm looking short the euro dollar for now, right? And as you can see here, this is the hourly chart that we are looking at. You can see that the euro is quite bearish, right? The pound is a lot stronger compared to European dollar. If we actually go to the chart here and look around the 6th again, right? We're looking around at the 6th. So that was around this area right here. Let's just get rid of all this noise. Right, it was right around this area here where we were looking to take that possible sell to the downside. Now you can see overall we were seeing a lot more of a sell-off, right? We are seeing some euro dollar weakness, more of a GBP strength in this currency pair, right? Not so much GBP strength, but overall the euro dollar just being a lot weaker than usual, right? So at this point, we're looking for continuation with this sort of channel trend that we are seeing, right? Let's just remove this and put in a normal trend line. So sort of like a channel trend that we are seeing, right? So this is what we're looking at. Price was bouncing up and down this area, as you can see, kind of respecting a move down, right? So a possible pullback along this trend channel, as you can see here, and a continuation moving downwards, right, as we have new levels of support and resistance being formed. But as you can see, as price started playing out, price danced around that area, we got wicked up right around here to the stop, right? Still overall at that point respecting this channel trend, but then price started to push a little bit higher, right? So price started doing sort of a retracement right here. So the other point of entry we're looking at is probably right around here, right? After this pullback, because overall we still do have a selling bias against the euro dollar, right? So we're looking for possible entry right around this area for the a second entry, if we were looking to get back involved into this pair. One thing that we like to do here in the community is on market opens on the Sunday evenings, we do take trade setups that do look highly probable or look like they stand a chance of playing out, right, short as the week continues. So we enter trades on market open. Some people may opt not to do this, but it's something that I personally do. I send all trades that I do take into the group as well, being very transparent with what it is I'm taking, what it is I'm looking at, why I'm doing this or that, right? So I do take these trades. However, I do use a low risk because sometimes on market opens we can get a lot of false moves, right? So it's important not to enter all these trade setups as soon as the markets open with your usual risk amount, but to minimize your risk, as so in the event that price does stop you out, it is for a small loss overall, right? Especially when you do have market movement being kind of haptic and haphazard, as we are seeing currently with everything going on globally, right? With geopolitics and stuff being at play. JPY sell, was looking to see either one of two things happen here. Either price goes up back into this resistance area, or we see a push below the support for continuation moving lower. As you can see, we do have that bearishness. So overall, we did have a stronger Japanese yen compared to other currency pairs, other currencies, sorry, right? So I was looking for that yen pressure to continue pushing downward on this particular pair. However, that was not the case. Price started ranging in between that area right there, and it caused for some very weird price action to occur. And this was the GBP sell. It was going down at the point of time when we did enter. Could have broken even at that point, protected positions. 80 USD also had a buy here. All right, again, overall, we are seeing an uptrending movement. We got that price ejection right above this area. We have our resistance zone as well. One of the reasons why I took this trade or even looked to enter on this trade was because of how we got that rejection overall. So let's just go to the chart and you could see this a little bit more clearer. Right, so this is what we're looking at. Let's just take this out too. And first foremost, that candle. Alright, we got the price pullback. Alright, so you saw that price pulled back, right? And this just has to do mainly with how price action plays on the charts, right? So we had that sharp pullback and then price just pushed higher up. Now, this is something that you do see commonly happening. This is something that I would say you'll get more experience or a little bit more clarity on understanding price action and expecting these certain moves when you do see certain candle patterns or certain candle formations, right? So previously, when we did have the market open and we saw that first initial candle that pulled back right here, right, coming closer to the actual close of the candle, we saw this wick form, right? We saw this first wick form, and now price started pushing from below, right, of that wick back to the open area, right? And that results in you seeing something like, let me try and draw that out for you guys, right? So let's just take this. make this solid and make the background up solid too. All right, let's make that blue, green, sorry. All right. So something that you see happen is when price first forms bearish like that, right? And we do get a candle position, something like this, right? Price first forms bearish. We got that wick below, right? Price was like this, then it starts pushing, right? The volume starts pushing back upwards, right? So the opening now comes closer to the close, coming down into the close of the actual candle, right? And then we start seeing a push higher. Price starts pushing higher, right? And that is the candle pattern, or the candle rejection I was seeing at the point of time, potentially playing out on this particular trade at that point of time, right? Because at the opening, we already got that push below. We had a reasonable wick away from the area of that entry that I took, right? Let me just delete this. We had a reasonable wick away from that. We already have an uptrend. We identified that. So we could expect to see some market bullishness, some momentum continuing with that push higher, right? So coming to the close, we saw price coming closer to the opening of this candle. And then we just got that bullish momentum continuing the push upwards, right? And price just continued doing that for a bit. And we exited somewhere right around this area, which would have been around 3%, 3.7%, right? Because at that point, one of the things we were seeing, right? First of all, you do have this sort of overextended price action where, just bullish momentum, right? Just this bullish push upwards, no real clear level until except right here where we entered on that market open. Right, we saw this one rejection from here. So at that point, right, we weren't able to close fully bullish, right? We left a wick from this top area. So we formed a new resistance area right here, right? Why we chose this as a resistance area, we formed this wick away from that area, right? We already know we have that bullish momentum. But for some reason, we couldn't continue that with the second candle that formed right after, right? We wicked away from this area, left that wick. This candle failed to push higher or close above this area, right? We got a bearish pull downwards. As we continue with the price action, again, we saw the same thing. Price started to push up a little bit, but then we had another bearish pull back down, right? At that point, what should tell you what you should be thinking is, okay, either breaking even or starting to close some of your positions. Because as price pushed into that area, right, once we failed to break past and continue higher, we already know that we are sort of in an overextended market, right? We don't have any real clear levels besides this one that formed on the market open right here, right, close to the open. Right, coming to where the volume was low, got that bullish momentum push higher as people entered the markets, right? Then we had this two rejections right here, wick away, bearish candle, try to push back in right here, back to the same level, so we can now establish this and confirm it as a resistance area, right? Because not once, but now twice, right? We got that pull away from that area, right? A bearish engulfing candle. That tells me, okay, now there's a probability that the trade can continue moving higher. However, at this point, I should be starting to either secure or take my profits, right? Because at that point, we're starting to see some rejections, right? We could possibly see a pullback for a continuation moving higher. But remember, we want to get our profits and avoid unnecessary drawdown, right? So at that point, we will exit the trade just to be on the safe side of things. And you see as price continues, we start pulling down, got this break, right? And this would have been a nice trade as well, as we got this break right here, this nice bearish candle break of this overall uptrend that we were seeing, could have entered for a sell and continue all the way back to the support area if possible, right? As you see, price started to play out, and let's just exit off of this, right? So price started to play out. We actually did come and touch into that support, and then price started moving up a little bit, and we're here right now, right? So this was another trade that was pretty lovely. So you got a little insight on this and why I would have exited the trade at this point, why I would have called it, and all of that good stuff, right? So we also had Euro USD sell. I'm just gonna skip through most of them, right? We're just gonna go through the main ones. So we had an overextended sell, right? Again, we are bearish on the euro. We have the dollar things picking up with the US economy. Also, we have the outlook for a hike rate increase, which could cause the US dollar to gain some bullish momentum coming closer to the actual release of that statement of a rate hike. But however, we're still in somewhat of uncertainty of whether they're going to do it. The Fed is going to actually hike rates up with everything that's currently going on with the higher oil prices, more demand for oil, Russia-Ukraine situation, the war, and the escalation of everything else, right? So there is sort of a uncertainty looming over that, which is playing into the markets and the US dollar strength relative to a lot of these other weaker currencies, such as a case example, Euro USD, right? So Euro USD was looking pretty solid at the point of time. Again, bearish on the euro, and more so a little bit more bullish on the dollar coming closer to the news, right? So as you can see, price was pulling down. We did come tap back right here, started pulling a little bit back into profit, right, around like 2%, around like 2% profit. And we had this correction right here. At this point, would have looked to break even, right? If I don't see a continuation, again, we are in a very bearish market. At that point, if I don't see a continuation or break of this area right here where I had a previous wick rejection, right, then I'll be less likely to hold that trade, right? As it pains me because, we do have some fundamentals aligning with the overall technicals that we were seeing at that point of time, right? You need to be aware of how price is moving in the moment, right? And be prepared for, the uncertainty or the probability that, okay, this may not play out in my favor. I need to protect my position. I need to protect my capital, and just get away from thinking that the market needs to do what I wanted to do or needed to do, right? The markets don't care about who you are. It doesn't listen to you. You don't have no control over the markets, right? The market does what it wants. You just need to be able to protect yourself when it does do those, uncertain things. So that is what we did. We did have, the slight gains here, as you can see, AUD USD and Euro USD. And we also had a CAD JPY trade that we took previously on the market close of the week before, right? So we were solid covered from the little L's that we did take from last week. This is where we're looking to enter, a secondary entry right here, because the first one started playing out. We did get some profits from that. Was looking for that secondary entry on the Euro GBP. Right, that was a secondary sell. Move my stop slightly higher to avoid stopping out early on the Euro GBP. I can close right now at the original stop loss because price started pulling back up from that area. The GJ sell, which didn't play out, price started to range within this zone right here. Another trade here was GBP CAD buy. Stop loss is 22 pips. This trade was purely price action based, right? So just, for some context at the point of time, what I was looking at, price was previously on a strong downtrend, and we tapped into this area, currently showing some support here, indicating the potential to now retrace. Long term, I am short, but however, we could probably see some pullbacks or recovery from these long bearish pushes, right? The traders riskier, so be mindful of your risk percentage, right? Whether you're using 1% or 0.5, you need to be aware of the amount of money you are risking per trade. because that is really the most that you actually have control over in the market. It's just the amount of money you are risking per trade, right? Everything else could do what it wants. Your only control is the risk amount, right? So as you can see here, price actually played out pretty well, right? Let's just rewind this a bit for you guys. We had multiple like wins, just complete wins, right? But we still could work on a few stuff when it comes to entering. I do use a tight stop loss, so it's really it's really tasking sometimes, right? So this was the trade here. You can see the same levels. Nothing has changed. A 6.7, 22 pip trade, right? 22 pip risk trade, right? And as you can see, price started playing out. Let me just pull this back a little bit. Price started playing out, right? This was the first take profit where we took our profits initially, right? So this was around 3%. Initially, I took that 3% profit right there. All right, so if you just look, we started profiting. Security bad boys, good morning. This was around that 3% right there as the candle pushed up, right? So 2.6 from G card, right? Then we had a Euro card buy as well, and then Euro card around here. Same analysis, stop loss is 32 pips, right? So the card was playing out, the Euro card started to playing out a little bit as well. So as you can see, this started playing out. Let's just continue on, right? So one of the reasons, again, why I closed this trade was because of these wick rejections right here. Now, overall, yes, the trade did play out. Just let me just adjust this. Okay, so yes, overall the trade did play out, right? But watch this. We had multiple rejections right from this area, whether it's bullish or not. We had multiple pullbacks. So at that point, you want to secure the profits that you already do have, either if it's to break even or take the profits right at this high where we're seeing those rejections. Now, if you wanted a continuation or enter, another possible setup, you'll do that once we see a break of that actual level. So you see price came back right into the entry, started bouncing, bouncing. So at this point right here, this would have been a nice possible area to actually enter to, because we now see this sort of support being formed right here. We got this push above, closing above this last wick, right? Price started bouncing right into this area where we had our previous rejections into that area as well. And we're looking at this current push up. So something like this, right, would have been possible. Maybe our stops right here, take profit right back into here. Something like this would have been like a possible trade I would have entered if I was looking at it at the point of time for that actual push higher, right? So you can see price started doing this thing, pull back, we got that push above, pull down, almost this stop, and price continued pushing higher a little bit, right? So we started bouncing. Finally, we got that push above, right? So you see, that's the risk that we run sometimes. So price pushed, tapped back right into this zone, right? So you could extend your stop loss a little bit further below these candles right here, right? And then price started to push back up again. And we could have played out for another 3% winner or something. But alas, that is not what happened. We were able to get out right around here at that 3% win. And just to further see some clarity, go on the daily chart. What we could see here, price tapped into this daily area where we did see some price rejection right from that area. Price was respecting this area right here. We got this break below, but then we got this bullish candle push all the way back up here. So at that point, as well as with the overextended bearishness that we were seeing along with these kind of rejections, we could assume or make, we have a higher probability that price will push up rather than pushing downwards, right? Especially with these wicks here. Now, if price did push downward, we could have changed our bias, right? And it will be right to do so if we change our bias into a sell now, because if we got a solid push downward and a close below, that now means that sellers are more in control of the market, of this particular currency pair, right? So we will now be able to see more of a sell off as things progress, right? Which we aren't wrong in nature to do, right? This was also a possible trade that's looking to enter. Price was just dancing around this area right here. As you can see, started pushing, and just started, moving down. Just, it's disgusting, really. It's disgusting. All right. I did actually have a trade here on one of my bigger accounts, looking to sell, with this being the exact same thing I was looking at, and price actually played out right after I started closing my positions right around here, right? So it happens. So the Euro card, we also had that was another pretty nice solid win. Right, so this was the Euro card. We got the entry. Price started pushing up 7%, clearly, right? Lovely, lovely trade. Price started pushing right here. Got an even further push right up here again. This was the original target level, somewhere around 4 or 5%. And with a higher target level, if we left price running even higher, right? With the pullback happening a little bit more dominant, we will see a little bit of recovery from the euro as well. Right, so this was one of the other trades that we did take with euro card. Price played out nicely. As you can see, we do have the same levels, right? So 38332. I just show you guys, he not capping, he's actually talking, good stuff. 38332, right? So we entered, boom, price went all the way up. That was a nice 7% win right there. All right, same levels, 40183, 40183. Yeah, so right around here, which would have been 4.8%, somewhere there. All right, so that was the original level that we were looking at. So boom, you see another nice play out here. Already over 10% profit for the week, and that was just on the 7th, right? The 7th would have been Monday. Your card, buy a secondary entry, stop loss, everything shown, right? So this was the secondary entry on the euro card we were looking at for continuation. Let me just input that right here. And you can see, guys, it's insane what is possible, right? So let me just put these levels in for you guys. 388. This was the other trade that we took right here. All right, as you can see, this also played out pretty nicely too. All right, price pushed up, we got that entry right there, and then price continued moving even higher with the Eurocard second buy position. I put it out for another 4.46, around 5%. If we left it running even higher, would have been 7% as well. Right, so on this trade alone, we got over 10%. Right, 1, 2. The GBP card also played out pretty nicely. Sorry for making this too long, but it's just like running through every trade, just incredible, right? Euro GBP, Euro JPY buy. Was looking at the same thing here with a stop loss of 37 pips, right? So currently only have 2% risk running. Everything else break even or closed profits. These are riskier setups, so use proper risk management. Going out to the gold membership people. This was the Japanese yen, was looking at basically the same thing that actually played out and happened. Overall, we will see a recovery on the European JP, the Euro JPY. So that was one of the initial buys that we were going with, right? But as you see, price on the JPY itself was a little bit more tricky. right? Because we came into here, obviously we continued up, but not before we made a pullback, right? So price came here, pulled back, right? Then we got this bullish candle push up here, closing above this area of resistance. So at that point, we could have actually entered right along here for a continuation higher. However, that was not the case, right? I didn't bother entering back into the trade, right? This is another trade here, secondary position and profit as well. This was the euro card. Price did come back down. I got into another entry right around here on this third position that I took personally for myself, right? When price did come back right here, right? So price went up, it came back, almost stopped us out, right? But then it continued moving higher. JPY, this was the sell and got that clean break to the downside. Was looking for a possible continuation, but again, the JPY is a little bit more trickier, right? The JPY was a little bit more trickier overall. Your 80 sell. Only other trade I am in for tonight is a sell on Euro AD with a stop loss of 71 and 30 pips respectively. Looking for a continuation lower if we could get that clean break below. Riskier setup, so manage risk accordingly. That is, it's up to you as a trader to know how to manage your risk. I can only tell you how much I'm risking per trade. I usually risk 1 to 2% per trade. As I do continue building my profits, that risk margin does grow to accommodate. I'm a type of person, I'm comfortable with an overall leaving every month with an overall 10% gain for the very least, right? So because of how we trade, because of how much profits that we do make, this is not even, something that we worry about really, right? Because more than likely for the cost of the month, for the duration of the month, right, from the trades that we do take, we're gonna be over that 10% mark. So 10% is like your savings, and anything else is your check-ins to use. That's how I describe it. 10%, that's there. We make that, we set that aside. All the other profits that we do make, right, we start using that as our baseline for risk. So if I make 10% or let's say 12%, I set my 10% aside. I'll start using the extra 2% risk, right, to continue building on my trades that I do take, or taking probable setups for more gains, right? So with that 2%, we now have the ability to do anything that we want, while overall still leaving the month with a nice amount of profits, right? Which is 10%. The industry standard is like around 5% a month or something like that. So we're already doing above average, which is great, right? And this is the thing about the VIP, it's just clicks, right? So this is where we're coming out in positions on the Euro card, right? This was right around the area of the 4% wins and all of that, right? So you can see right here, it was right around that baseline area. Price continued even pushing up higher. So if you held that trade, or you just put your stops to break even, you've been in a really great position, right? Because I was looking now for, better setups to come, right? Let's see if we could get anything better. That's what I was thinking in my mind. So yeah, price came up to right around here, right? And then it continued moving even higher. So if you held, then you've been in a really solid position, so to speak, right? So yeah, that's what happened here for me. Overall price did play out really, really great. But yeah, came out with a pretty solid win, especially with this third position that was open on, right? So price push higher, congrats, went all the way almost to, full take profits, right? As you can see here, price continued pushing even higher, which was pretty great, right? Your card was looking for a sell right here above that area where we saw price move up to, right, for a possible continuation with the overall bearishness. That did not play out. Here we just asked who was in profit, who was in drawdown. People were making money, was in the gains, 10% plus, between 0.5 and 5% as well, right? I think these are the people that was just using, 0. 5% risk per trade, right? So around 5% and so forth. Right, so we did have some L's, reduced risk, and then 1%. T2 pip stop loss on 80 USD, breaking support to head lower, possibly not entering personally, but looks solid. This wasn't a trade I entered, but it looks solid. It started playing out to the downside, I believe, for a little bit. Eurocard sell, entering here with a sell for a sell here with a stop loss of 25 pips, right? And this Eurocard sell was an anticipation, right, for the card news that we did have coming out Friday itself. But again, we did enter sort of early on this particular trade, right? It caused a slight drawdown, right? But that's all part of trading. We don't get it 100% of the time, but we do try to get the majority of the time. So I explain here what it is I was looking at. After my preliminary analysis, it seems the ECB is less likely to increase their rates at this point, with the current situation impacting energy consumption on the varying economies that do receive imports from Russia. As such, the likelihood, albeit possible, we can still see this increase the impact. This increase the impact may be softened significantly unless we do see some sort of change from now to then, the Thursday of the release, right? So we did have the euro, some euro stuff coming out, right? With the ECB likely leaving rates the same, we could possibly see a spike and then a continuation lower, which was something that isn't it isn't uncommon to see something like that happening, because we do see a lot of market manipulation coming to these certain sort of stuff, right? Where institution would enter, driving price higher up, and then we have the retail traders actually buying into the trade itself as well, right? Price pushes up into a certain area where liquidity is grabbed, and then just on the second candle after that first initial candle, or when the news is released, we get a total correction of that push higher or push lower, whichever one be it, and then we get a continuation into that zone, right? Into that zone. So GBP card sell, stop loss is 16 pips, looking for further push down after this break to the upside. Market manipulation, is heavy at play, hence we encounter some losses that was unavoidable a little. We are coming to a market session gap where spreads widen. Something to note is usually we do see some spikes in the upside in cases like these. However, I'm taking the risk to sell here with the overall price action also dependent on the continuation of everything, and the demand of oil would significantly increase production and exportation from Canada, thereby boosting the economy even further if we look at it from an energy production perspective, right? So this is also one of the other fundamentals, like why fundamentals is so important when we do actually do trade, right? Some of the reasons why we need to pay attention to what's going on globally, economically, and geopolitics as well when it comes to trading is because we're dealing with economies, right? Price action is one thing when we're looking at the charts. However, overall, we are dealing with large economies. We are dealing with money, right? But overall, we are dealing with economies, and each economy, what they're doing affects the movement of their currency. And that was one of the reasons why I looked to take the sell with the Canadian dollar, looking for that push lower, especially with the kind of news that we were seeing, that was coming out on Friday, right? Was looking for that news release to actually keep price pushing lower in favor of the Canadian dollar, as we were expecting positive outcomes, right? Euro AD as well. Sell, stop loss is 48 pips. Basically with the same analysis as your card. Again, a lot of manipulations. Be careful if you're holding the risk. Do not enter if you're not comfortable with risk, or enter with 1%. Enter the risk with 1%. Be aware of market gap with the widening spreads if you want to take the trades afterwards, as it does sometimes can make the buyers shaky compared to when previously done, right? Because again, we do have those gaps happening. Can exit at break even on the euro trades, better manage risk if you feel the need to, right? So the euro trades were going actually in positive. However, with everything going on, you could have opted to actually exit at break even, right? Just to be more on the safer side. So right, I was at home. This is just me explaining some stuff when it comes to risk management. You need to understand your risk tolerance, how much you're able to risk per trade, especially if you're on a funded account. Obviously, you shouldn't be taking 1% risk for each trade that you do take on a funded account. You should allow yourself some room for, drawdown as well. So risking 0.25 to 5%, with a total of maybe, let's say, 3% allocated on any given day would help you in actually maintaining those funded accounts if you do trade as a funded trader, right? If you're using your personal account, you have more leeway to do what you want when it comes to your risk management, right? Um, but overall, yeah, you need to be aware of how much you're risking per trade, right? Because we had a lot of wins, but at the end of the day, it's up to you, right? What separates you from, being a loser in the markets is your risk management, right? I may be somebody that's in profit, the trade's working out, but you could also be in drawdown even though the trades are working out because you're not wisely managing your risk. And that is one of the reasons why I personally don't choose to look at my trades in terms of the amount of pips being made, but in terms of the amount of percentage of your overall account, because pips is just one thing, but looking at the percentage overall is something entirely different when it comes to actually taking trades on a funded account, or just managing or looking at how your returns are looking at the ending of the month or year, or however you look at your results as a trader, right? So take stop loss on your AD, falling with the big banks, was looking for a continuation on this. However, this did not play out fully, right? Was looking for a continuation with the movement that we were seeing, right? It was riskier. We did have a lot of manipulation still happening surrounding the euro dollar, right? Again, we were seeing a lot more bullish push. However, this was not supported by any fundamental data whatsoever that we were seeing this bullishness on the euro dollar itself, right? So this is just purely manipulation of price. So that's one of the reasons why we just, was working with it, but at the same time, not too heavily invested into it, right? So this is the Euro AED. Price was played out a little bit. We did get that push continuation upwards at the end of the second position, broke even at the first one, right? I'm basically looking for some respect, right, from the previous candle and an indication to move higher. This could be possible. Play towards the Euro news tomorrow. Things are looking sort of uncertain at the moment. Euro USD and AED also looking prime for possible buys as oil prices continue surging, demanding, dampening the dollar a bit. Sorry, right? So use a stop loss of 53 pips instead, expanding it a little bit because I do use tight stops. But this is the sort of market environment that would require sort of a more wider range allowed for drawdown. So suggested using that 53 pip stop loss instead. Alright, so we didn't come closer to the euro news. Something like this after getting stopped out at break even. We have barely seen any real trend in the market or resemblance of what we are usually accustomed to. However, we strive to continue. This looks like a possibility, right? And this is the Euro AUD that we were looking at again with the bearish Euro news. Was looking for that continuation. So this was the Euro AUD looking for entry. This was a 9% one right here, and also a 3% one, right? So 42 pip stop loss of the second entry here, right? So I shared both my entries. And let's just go to the chart so you guys to see this as well. And like I said, it's just gain after gain after gain after gain. I'm honestly fed up with myself with the amount of profits that we do make, right? Again, yes, we do have our little losers here and there. Again, we do have a lot of market manipulation happening. Let's just input the levels for this short. Just give me a second here, guys. 50583. 50583. Our profit level was 49320, and the stop loss level was 15998. Right, so boom, this was one trade right here, and this was the second one right here. Let's just make sure it's the correct levels. 894, 894. The entry zone is the same as well as the take profit being at 48,924. Alright, so these were the trades right here. These two. Alright. So if we're just looking back, this is the second one right here that we entered. Let's just replay this. Alright, so this is where we entered, right? We entered right around this area right here as price was pushing to the downside. Boom. Coming close to the Euro news, right? So we started push. We saw price formed this, right? We got this push right here. Price pushed up, put back down, put back right here. So this was the area that we were looking at for see a possible continuation move lower as price came close, as time came closer to the Euro news. We already had our analysis on what was going to expect happening, right? So we already had our bias and what we were looking for the initial move, right? Was also looking to sell here on Euro CHF as well. Set break even stops, and then we're over a 4% profit. I don't know why they say 4, they're supposed to be 14. 14% profit, right? And let's just look at this, right? Because came into the news, price spiked upwards. There's supposed to be 14% profit. We had a past couple of weeks had been rough and harder to navigate. I'll be approaching next week, taking a total of 3 to 5 trades, lessening the volume. Hopefully next month is kinda as well, right? Because we did have a rough start. We did come up with around, well, I did come up with around 14% at this point of time, right? And price corrected the move like predicted, could re-enter the original positions, right? Because this is what we were looking at right here, right? Price corrected the move. We got the push up, then we got a correction of that move, right? And let's just look at this real quick. So this is what happened. We got the pushed up, right? Stopped out at this area, but then boom, price came, corrected that move. What we had happening after the formation of this candle, we re-entered our position, and let's just go down to 30 minutes and the 15 minutes so you can see that more clearly, right? So this is what we had happening. Price came, this was at the close of this area, re-entered our position, then boom, price started just playing all the way out. Price just started doing its thing, right? We exited right around this area right here, right, as price started pushing higher. So this was 7%, right? And obviously this first one here as well, the second entry here as well, also 3%, right? So this was over a 10% gain right here altogether. So as I said, it's just crazy, right? So 6% up off of the original 9% at that point of time right here, came down all the way to 7%. This was something as well for anyone that had some similar questions to someone that asked me something here generally, right? GBP card, these were the last trades that we took. I'm just running through this quick, right? Can extend higher if you feel more comfortable. This was a sell. This was a sell as well. GBP AD, right? GB card stop loss. Sorry. Yeah, the GB card stop loss, price and pip re-entry around the same area amid news. I was looking for re-entry here. CAD JPY buy right around here as well, and 80 CAD sell, right? So you had 80 CAD sell, CAD JPY buy, and GBP CAD sell, right? Again, I do use tight stop losses, right? So could have re-entered the original position on this as well with the GBP CAD. This is where the Euro CAD actually played out to the downside here. You can see 80 CAD played out, boom, 5%, pretty nice, 5.7%. Price played out all the way. GBP CAD, see price came here, pushed all the way down. This was 6.3% winner. If we entered this position right here, this would have been a 12% gain, which is just completely insane, right? So yeah, the GBP CAD, right, first played out, price came, pushed down the first position here around 4%, left to extend around 6-7%, right? 6% right here, right? Because we even got a break up below this current daily level, right? We got a break even lower, right? So that was pretty good. And then this one here for like around 9% or something like that, right? 7% here, around 9% if we left it to actually continue. So just crazy insane with the profits, right? The profit margin is incredibly insane, right? CAD JPY buy as well, incredibly insane too, right? And this was one of the analysis that we done. So you see price came right here, news for the card came out pretty strong, and we had this played out for 5.6%. If you're looking for the news this week, what we were looking at right over here on Friday, right, we were looking at unemployment rate and employment change for February. You can see we have more positive number than what we were expecting previously, right? So we could see here for the Canadian dollar, we had some high impactful news on unemployment. We had a pretty good number for unemployment rate and employment change as well from what we expected. The consensus was 160. We had 326.6 thousand and 5.5% here, a better expected result than the 6.2% that was the consensus, right? So we did have some pretty bullish news. We did have some pretty bullish news for the Canadian dollar, which helped push the CAD even higher, really ending our week off pretty nicely, right? So congrats. Hope everyone had a great and profitable week. You know, some people were able to gain right here. At least I think everybody should have gained on this, right? Everybody had, you know, the opportunity to gain on that. And same thing goes for here for the free channel as well. Just running through these real quick because I know this is pretty long and you guys probably not gonna listen to everything here. But yeah, mostly same trades were sent. VIP and both the VIP and the free Telegram group were able to make a lot of money, a lot of profits off of these trades, right? And even coming down here, we did have some card positions, right? These were the card positions that we did have running right here. As you can see, we took them right around here, right? So the CAD JPY buys on March 9th. This was the first entry. We had this solid entry here. Then we had a secondary entry right here. I see price played out. Then we had a third entry, right, for a risk continuation. Right, we did have this pullback. Price started pushing back into profit. Boom. And then boom. Ended it right here. Price push, price push, price push. 3 positions, price just pushed higher, leaving 15% alone on those 3 positions right there, right? And virtually zero risk at all because price just started moving into profit right after, right? we did have this pullback right here, right? But price continued moving upwards again. We expected this soon, and price continued moving up. So yeah, it was pretty neat, pretty good, right? It was a good trading week overall for everyone. We do aim for that 5% right here in the free. But as you can see, we did do over that, like 3 weeks worth of profit, and more, because we did have the Euro card as well and some other trades sent that were in profit too. Right, so you can see, guys, the trades, the group, it's very profitable, overly profitable, if so. Not to brag or anything, but it's just like an insane amount. And one of the things I wanted to speak about too that I do with my analysis is something I like to call predictive analysis, right? And this is just dealing mostly on the fundamental side, especially now that it plays a huge part with everything going on and how we navigate the markets right now with the situation that we are seeing with Russia and Ukraine. When we're talking about Russia and the sanctions placed on them, we're talking about Russia being one of the largest oil exporters um, in the world, right? So a lot of economies are affected by what's happening right now with them not being able to export any goods. Energy production, cost of oil has gone up significantly higher, right? And the demand for it has gone higher as well, right? So therefore the price has gone higher and so forth, right? That being said, using predictive analysis on the fundamental side of things, we're able to be a little bit more assured about what we could expect for these highly impactful news events, such as the Canadian dollar here with the unemployment and employment change, when we are checking it from the February perspective, right? We did see a large increase of employment from the amount of people that were employed on February, right? This would have been from the ending of January into February month, for Canada, sorry, right? So we did see this large increase. I expected a large increase with everything going on. The Canadian economy has been one of the most outperforming economy, right? Um, that's just flying colors right now, right? As you can see from other news events that we did have leading up to even this from the past few months, the Canadian economy has been ahead of everything thus far and been recovering pretty strongly. So we could have seen and anticipated this sort of higher move on the Canadian dollar, and as well as the possibility that investors, large hedge fund owners, and all those other institutes that do drive the markets would have also been looking towards this push higher in price for the Canadian dollar. So we were able to get in on that movement, and we were able to make some profits from that, right? And this is one of the things about predictive analysis, right? We're able to analyze previous data points that we did have, and able to build a general bias of what we should expect happening now, compared to what is happening currently overall in the markets, right? And it gives us higher probability to enter in trades when it comes to trading on a fundamental aspect, right? Or from a fundamental perspective. So hopefully that makes sense for you guys. If you have any questions, feel free to ask me. Leave a comment, leave a like, subscribe so you can get future updates of any more videos like these to come out with the weekly analysis, and just enjoy the profits. And you can see the VIP does insane numbers consistently over and over again. I kind of stressed it. So feel free to get in contact with me. Discord link right in the description of this video, so that you could join the VIP group as well and just sharing the profits. VIP group is currently for 65 US right now per month recurring, right? The original price is 80. We do have some open spots, being 12 open spots for the discount right now, and it is going, guys. So get in contact, reserve a spot, try and join the VIP as soon as possible as you can, and just gain some profits, right? Come into profits. Let's just ride the markets and just grow as a community. Make sure to like the video as well, guys, so that we could spread the channel around, get more people interested, grow the economy, grow the community, and become one of the largest forex community out there that just keeps on providing profits for its community members And that's really all that I want to do, is just help everyone in the best way possible that I can, by just sharing my trades, sharing my profits with everyone else, right? So that's it for this video, guys. Hope you guys were able to learn something from it. See you in the next one, and good luck for next week as we enter the markets, looking to slay it again and again and again and again. All right, guys. So have a good week. Have a good weekend, and this is to having a good trading week as well. All right, peace.